All right, Dr. Henney, we've been talking about looking at drill core and analyzing the pictures that companies share after they've done their first drills. Let's take it a step further though here and talk about what happens when they've sent that core for analysis and have gotten some assay results back. I guess to start off, what matters? Like when I open up a news release of that sort, company is announcing grades or something. What is the first thing I should be looking at?
You know, it's interesting. I mean, news releases are meant to inform investors about the deposit, but in any news release, you're not going to get a total picture. Like there's never going to be a case where you have all of the drill holes that you need to fully assess a discovery or a deposit that's being drilled. It's really it's always done in piecemeal. So you get whatever assays the company gets back in our material. They put them out in a news release maybe every few weeks, 2 weeks, 4 weeks, whatever. And you have to kind of build the story. All right. So my advice, and I have said this many times, is that people should keep track of assays. Okay, like build your own spreadsheet. Right, like take the data that comes out of that news release and put it into an Excel spreadsheet or something so that you can personally keep track of the history of assays and data that's coming in. Some of us have luxury of having software where we can actually enter the data and build 3D models and stuff, but I know most people don't have that. So what you're trying to get out of the news in any given news release is the mineralization that's being intersected, is it significant? Is it of potential economic interest? Okay, and there's a lot of factors to that. Is the grade there? That's one of them. Is the geometry understood? Do they know? Is it a vein? Is it a tabular body that's kind of flat? What kind of shape does it take? And what is the drilling telling you about the overall volume of rock that might be mineralized? Those are the kind of things you're trying to pull out of any given news release. All right, so let's talk about grade. Okay, I've talked quite a few times about kind of the typical grades one would hope to see in, say, an open pit, for example. All right, so if you're dealing with a bulk tonnage, a long intercepts of lower grade mineralization, generally you're going to want to see metal values of say $50 or more per ton to sustain an open pit. And I would argue that that's true across the board. It's true in gold, it's true in copper, it's true in other base metals, silver, whatever. It's really about the amount of dollars in the rock that are present in an open pit setting. Now, metallurgy obviously has an impact too. But we're talking about drill results, so I'm going to kind of stick to that, and I'll just say that metallurgy is an important component. All right, that you have to bear in mind too. All right, but we're going to assume that the deposit is reasonably metallurgically friendly in this particular case, so that we can talk about this. So, in terms of gold, what does that mean? Well, gold's trading about $50-$55 a gram right now. So 1 gram per ton is basically your level of interest. If you're seeing drill intercepts in the neighborhood of a gram or better, those are certainly significant. Those are ones you want to take note of. Now, sometimes it's a bit lower. Like there are deposits that are very metallurgically friendly, say open pit heap leach, that could go as low as 0.6 or 0.8 grams. But those are a little bit more rare, we'll say, in the spectrum of economic deposits. So gram is an easy one to remember. You can remember, okay, a gram per ton, that's a good number. Okay, copper, what does that translate to? Well, right now, copper gold ratio, it's about 0.6%, 0.7% copper equals 1 gram of gold. In other words, 0.6 or 0.7% of copper is equal to about $50 of metal in a ton of rock. Now, again, there's mines that operate at 0.45% copper or something like this. So they operate at lower levels. There's exceptional cases. Solution extraction copper is cheaper to produce than floating a concentrate, and et cetera. So there's other factors, but 0.6 is probably a good number to kind of park in the brain. Now, of course, you get some deposits that are mixed metals, right? You get gold, copper, so then you have to start doing kind of equivalency to figure out, is this economic? Well, is a half gram gold and 0.3% copper. Well, yeah, that works because that's roughly a gram gold equivalent. Okay, so those are the kind of numbers you want to focus on, and then widths. Look, if you're dealing in an open pit setting, if you see drill results that are 10 meters, 20 meters of a gram gold, not that's not so interesting. If you see 100, 200-meter intercepts, or hundreds of meter intercepts, yeah, certainly that's interesting, especially if the geometry looks like the bulk, the bulk volume of rock is indeed there. So you're really trying to get a sense of the grade, whether it's economic. You're trying to get a sense of the volume of the rock. If they've drilled straight down something, hopefully they are kind enough to disclose that in the news release. Sometimes they do, sometimes they don't. But you kind of have to, comb through the details to find out those specifics. Now, underground. So should I talk? You want me to talk about underground mining too? Because underground mining, you need higher grades to sustain, on operation. Underground mining is somewhat higher than the cost of open pit mining. So in an underground setting, look, intercepts of 4 or 5 grams are kind of your lower threshold for gold. Okay, in copper world, you might expect to see 1.5% or 2% copper and above. Those would be probably underground sustainable kind of grades. But you also have to see the widths there too. Okay, you can't have skinny veins or skinny structures that host the gold. If you're seeing numbers 0.5 meters of 4 grams, not so interesting. 5 meters of 4 grams, yeah, that's pretty interesting. Okay, that's kind of the difference between night and day, really. But that's kind of the levels that people should gear their thinking towards, is those numbers. Say 4 or 5 gram gold, 1.5% or 2% copper for an underground, and then an open pit, 1 gram gold and say 0.6% copper.
Okay, so the first two things that I should be looking at, the first thing that I should be looking at is really two things, and that's the grade and the depth at which the grades have been hit, right? So what is the difference there? When does a project become an underground project, or when is a project an open pit?
Well, that's where you need all the data back so you can understand what the true geometry of the rock, the body of mineralized rock is, and where it sits in space. Is it up near surface? Is it down deep? You got to understand these things. Now, look, if it's just one news release, I guess what I would say is there's probably going to be some red flags that might pop out. For example, if you read and you say, okay, this company hit 3 meters of 5 grams, but it's 1,000 meters down. Okay, is that really significant? No, that's a long way down. That's a kilometer down. Okay, it might be more significant if it's a bit shallower, but not at that depth. And then the flip side, look, what if you drilled 200 meters of a gram, but it's at 1,000 meters? Probably less interesting than 200 meters of a gram at basically 0 meters, like surface. Okay, so yes, the depth, you can take that into consideration. If you start to see some very deep numbers, 300, 400, 500 meters or 1,000 meters or something, yep, different scenario, more costly.
Mm-hmm. Where does the old, I don't know if it's old, but it's the gram meter rule, like 100 gram meters, meaning
Sure.
a grade of like 1 gram per ton over 100 meters, or 10 grams per ton over 10 meters. Is that still a good rule of thumb for open pits?
Yeah, I think we've talked about this before. I use gram meters religiously because the gram meters are really your best gauge to whether the project's going to be successful. Like if you just look at discoveries that have been made throughout history and the drill holes that they deliver, you can usually tell right away by the gram meters whether it's going to be successful. Okay, so what gram meters are, like you said, you take the length of the interval, so the length of the reported drill intercept, and you multiply that times the grade in grams per ton. All right, so 100 meters times 1 gram per ton would be 100 gram meters, or 100 grams of gold per ton over 1 meter would be 100 gram meters. Regardless, okay, those drill holes, those intercepts, 100 meters of a gram or 100 grams over a meter, in my book, are both very significant. If you see those types of numbers again and again in drilling, from any given discovery, usually that bodes well. It means this is likely going to be an economic mine. So yes, that is another good rule to follow. You can translate that to other metals too, like copper. Okay, so let's say you want to know if a copper intercept is significant. I have seen people use um, percent meters, like percentage copper, times meters. That's easily applicable. But if you want to make your life simple, just translate copper to gold. Okay, so use as a rule of thumb right now, you can use about 0.6% copper equals 1 gram. Okay, so if you look at the assays and it says, okay, we got 0.6% copper over 100 meters, that's effectively 1 gram over 100 meters. All
Mm,
right, and that would be a significant interval. All right.
right. Right. Sometimes I'd hear you talking on Crescott's channel about some very narrow intercepts, though. For example, ones that come up recently is Lethal Quest was last week or so, and most of their intercepts were under a meter. So what would you
Yeah.
consider too narrow to matter if it is high grade, but it's
Yeah.
narrow?
Yeah. It Nothing that LithoQuest published out of that most recent news release is economic as it currently stands. What I'm looking at in that particular news release is this system capable of making higher grade gold mineralization, and that was evident. Okay, so even though the intercepts were quite narrow, like I think the 27 grammer was over a half a meter or something like this, that's not economic. Okay, it's not significant in terms of being a potential viable deposit of some sort. But what it tells me is that gold system, if it could make 27 grams per ton, even in that small volume of rock, imagine that's telling you the system's capable of making grade. Okay, imagine if that system found the right spot somewhere nearby and did the same thing but in a much bigger scale. That's an economic deposit. Okay, so my with LithoQuest, look, I haven't met with the company really since they published those results, but I had an email exchange, and they're working on studying the structures of that target, the Muminiska project, and they're going to see if they can't find that sweet spot where you might find 27 grams over a larger volume, like a full nose, for example, where everything kind of gets focused, and that's what they need to find. The grades are clearly capable. The system's capable of making grade. Let's go find the price. So I wouldn't write. I wouldn't. Exploration is a process. Okay, I would not discount those results entirely. They're just telling you something about what you have to do next.
Okay, but so what is too narrow in a what would you consider too narrow?
Okay, well, when you're talking narrow, you're usually talking about underground mining. Okay, I mean, you could refer to open pit setting too, but we're going to talk about underground mining. Look, in an underground mine, in this day and age, we do not typically use the old-fashioned jackleg drills and hand labor and stuff. And what I mean by that is, back in the old days, a guy could fit in a stope. Okay, a person's about 0.6, 0.7 meters wide, right? A guy could fit in a stope and operate a jackleg drill and mine, fairly narrow slot, vein. Okay. But today, most of the equipment we have is mechanized, like a mini jumbo. I think it's about 1.4, 1.5 meters, across. All right. So you got to think in those terms to actually mine in this day and age with all the safety protocols we have. You have to mine at reasonable widths, about 1.5 meters, we'll call it, is kind of your minimum.
Mm,
All right. So let's say your drill intercept is narrow. Let's say your drill intercept is a half a meter, like true width. Okay, that's very narrow. All right, but a half a meter. Okay, let's say you're at a mining face in a meter and a half wide, and you've got roughly a third of that. Okay, a third of it is your vein, and let's say that vein's running 50 grams. Well, if you mine it at a meter and a half, and you take in that half a meter of high grade, yes, you're going to dilute because the stuff on the sides, either side, is going to effectively add zero to the gold content. Yes, you have to divide your 50 by 3. So what do you end up with? Well, about 16 point X grams, right? So you're going to have, you're still going to have an economic vein. You can mine that. You can mine 50 grams over a half meter, no problem. Now, if it were 5 grams over half a meter, that's a problem, okay? Because at a meter and a half wide, divide by 5, well, 1.6 grams, that's not very high grade. That's not going to sustain an underground mine. All right. So, the way to think of it is you probably need, again, 4 or 5 grams per ton over a realistic mining width to make an underground mine work.
Okay, so you take that 1.5 meter, and then you see the width of the vein. So if it's like, let's say it's only 30 centimeters, that means you got to divide your grade by 5. So if you're underground, you want about 4 grams of gold. That means that the vein has to be at least 20 grams. So if it's 30
Yeah.
centimeters, has to
Yeah.
be at least 20 grams, and then it might work. Is
Sure.
that okay? Okay, that's right.
Bingo. That's exactly the way to think of it. Yeah.
Okay. When does continuity start to matter though? Like, and how do you control that? I mean, like sometimes you would see companies, they would drill here, there's grade, then they would move, there's nothing, then there's a little bit, and then there's high grade, and there's nothing again, like sort of
Yep.
patchiness or whatever.
And I can tell you that any vein on the planet is never going to be perfectly continuous. Okay, like you're not going to see even grade straight down a vein. It'll kind of pinch and swell or come and go, and there's a lot of factors that can affect it. So people must understand that first and foremost. You must understand that very, very, very seldom do we see a nice, continuous, predictable grade over long distances. You say, over tens of meters or hundreds of meters. Usually we find the grade, might extend for 10 or 20 meters, and then there might be a bit of a gap, a diminished grade or even a zero grade if it pinches down, for example, and then it might pick up again. And that's very typical. Okay. So in any given vein system, you might, if you were to just start poking holes at a vein, a flat plane, and just poke, you might see maybe 3 or 4 out of 10 drill holes actually deliver economically interesting intercepts because they've hit the chutes. And which way the chutes go, who knows? I mean, there might be vertical chutes, they might be at an angle, they might take the shape of fish like this, sometimes they pinch and swell even in that sense. So there's a lot of different factors there, but nobody should be prepared to see a continuously mineralized vein. You must factor in the dilution. Okay, so let's say a company announces 20 drill holes into a mineralized structure, and let's say 8 of those holes deliver economically significant intercepts. I would consider that a win. That's pretty typical. Okay. But then then the company has to start focusing their drilling on the chutes. Once they know where those chutes are, they got to define those things because that's where all the goodies are. And really, then it becomes a story of evolving evolution of drilling and how they define the chutes within that. I can think back to quite a few stories like Eleanor in Quebec, where they had to drill those things intensively. Once they found these high grade ore bodies or chutes, they had to drill them intensively to figure out what kind of gold content there was in it. And that's one of the challenges of veins, to be frank, is you have to drill the suckers at 10 or 20 meter spacing to get a full understanding of what you actually have. In an open pit, like a big porphyry, no, you can drill big wide space holes a lot, it's a lot easier. But boy, veins, they can suck up the drill dollars.
Okay, and then also something that I also want to talk about here is that when you're drilling, there might be gold, copper, silver, whatever, but sometimes there's stuff in there that you don't want to have there because, like, you can have a high grade shallow deposit, but if it's riddled with, say, mercury, nobody's getting that gold out of the ground. So when I'm looking at the assay table, that's the first thing that I scroll to. If I start seeing stuff like arsenic or mercury or I don't know, bismuth or whatever it is, does that immediately mean that I should look no further? And how should I look at that?
Okay, look, that's a big topic. It is interesting you bring it up because in 43101 regs, there really is no requirement to disclose what other elements you're hitting in your vein. Like if you look at most tables, most assays that are released, you're looking at, the economic minerals, gold, silver, copper, whatever. You're not looking at what we call deleterious elements, elements that might have a negative impact either on the metallurgy or the product that comes out of that mine. Okay, but yes, there are deleterious elements. Now they got to be taken in context. Okay, for example, there are a lot of gold deposits that have arsenic. In fact, arsenic is almost ubiquitous with most gold deposits, but it's only a problem if it interferes with the recovery of the gold. Okay, meaning if the gold is bound up in arsenic bearing minerals like arsenian pyrite or something like this, and it's very difficult, it's refractory, you can't pull the gold out of that crystal. All right, so that's the biggest issue with deleterious elements in the gold world. Um, just how they play into the metallurgy. I'll leave it at that because it's too complicated to go off into the weeds and take an hour here. But that's usually the way you think of things in gold world. You want gold that's going to come out of the rock fairly easily and not be interfered with by other metals. All right, now let's move to base metal. Okay, copper. Okay, arsenic is a big factor in copper because if the minerals that the copper is bound up with also contain arsenic, for example, enargite, which is a copper arsenic bearing mineral, the smelters can't treat that easily. There's a very few smelters around the world that can treat arsenic rich concentrates. All right. So there are a lot of copper deposits. I know of one in Peru that a company has. They promoted this thing quite highly, and it's a copper arsenic system. And unfortunately, the arsenic's too darn high to allow a clean product, a clean concentrate to be made, and clean copper concentrate. And there's no way on earth that thing's ever going to be a mine. And I, it's a story that's out there, and I know it, but it's just not going to be mineable. Okay. There's no smelters that will take that kind of concentrate. So yes, those are factors. Now you mentioned other elements there. Look, some of the elements can actually be either, like I said, a deleterious element, but they can also be a byproduct element too. Okay. Like bismuth, the presence of bismuth alone is not necessarily a bad thing. There's a lot of, like, much of the bismuth we have in the world, like that comes through production, is a byproduct of treating concentrate. So it's not necessarily a bad thing. Now, cadmium, we don't use cadmium so much anymore, industrial and stuff. So it is now viewed more as a deleterious element, like something that has to be disposed of, gotten rid of, or treated somehow. So it can be a penalty element. Arsenic, certainly. Antimony, it depends. Okay. Antimony is another one of these where we do have demand for it, but if it's in a level that might interfere, in a smelter, it can be a penalty element. Okay. But it's not, there's no necessarily easy way to explain, every single type of concentrates that might come out of mines and say, this is good, this is bad. But in general, you want clean concentrates that you can sell to smelters. Okay. That's it.
But there's nothing like when you look at the assay table and you see like, okay, it's 5% arsenic that's not done. Is there like a line that you say this is too much, or does it depend on the project?
You know what? There are deposits in Nevada, for example, Carlin deposits, lots of arsenic. It's places, percentages level arsenic. You have minerals like realgar and orpiment, which are arsenic sulfides. Okay. And they're intimate with the gold, like they're part of the same rock. There's no they're physically connected. Now, in those cases, they have a myriad of ways to treat that type of gold ore. They can put it through an autoclave. They can put it through a roaster. They can put it through other processes that can extract the gold. So even with percentage level arsenic, they're able to treat most of the ores in Nevada. So not necessarily, no. Would I rather find a clean deposit? Yeah, sure, no problem. But there are plenty of ways to treat most arsenical ores, at least in Nevada. Now it becomes different. Like if you're in remote areas, like let's say northern British Columbia or Nunavut or somewhere where you have to treat arsenical ores that are refractory, where the gold's locked in there with the arsenic. then it's a problem. Okay, you got to take that gold out, which means you got to apply energy, chemical energy, or heat, energy, and try to get that gold out of that crystal lattice so you can recover it. Then it's a problem. Okay, there's a lot of arsenical deposits. I know of one in northern British Columbia. I think it's 1.3 million ounces, great grade, 10 grams per ton, but the sucker is refractory. And I know a lot of people have looked at it and they've tried to figure out how to make it work, but given its location, tough, very tough.
Hmm. Do you think that's ever going to be solved eventually, like through technology or innovation or something?
There's a lot of work being put into it, yes, and I think at some point we will see some advances. Well, I think we're already seeing some advances here recently. Let's see, we've invested in a company called Environmental that's working on different leach technologies. So I'm hopeful. I'm hopeful. There's a lot of smart people out there doing a lot of hard work to try to find new metallurgical solutions that are environmentally friendly, but also can treat some of the more problematic ores that we have. And really those advances. In fact, there's a group here in Boulder, Colorado, that's working on um, different copper leach technology. I don't know the full depth of it, but it sounds like they can leach very low grade copper ores or ores that were tossed aside, like in mines, mineralized waste, running 0.2, 0.3% copper. These guys think they actually have solutions like leach solutions that can treat some of those low grade ores, and that would be just huge because mines are chucking out like massive tonnages of low grade. Imagine if you could recover the copper. That could actually solve a lot of our copper demand
Yeah.
right now. Yeah.
Yeah. Yeah. Well, I'm a copper investor, so I hope that never happens. Um, Jokes aside, though, you told me that the company doesn't necessarily have to let you know that they found something else beside the thing that they were looking for. But don't the companies have to report all of the drill holes that they've done? Like if they do 20 holes and they report only the one,
I'm
five,
not.
seven,
I'm
and
not talking
19.
about assays. No, I'm not talking about assays. And yes, they are supposed to release assays from their drilling, like gold or silver or the economic metals. What I'm saying is there is no requirement for a company to provide all of the analyses for all the different metals
Hmm.
that might be in that drill hole. So, very seldom do you see a news release that has, arsenic, antimony, mercury, thallium, whatever, la la la, all these elements, these transition elements that might be in there. There's no 43-101 requirement for that. I don't even know how you do it exactly because every deposit is different. But look, I guess if I got to my grandstand here, what I would say is if there's one thing that people need to get really smart about in the whole investing scene, it's not really just about drilling. Okay, it's about metallurgy. When I worked at Newmont, for example, as an exploration geologist, Newmont had a requirement for us to do metallurgy, even in an early stage. Okay, like if we went out and looked at a prospect, the first question, everybody who was your boss had is, well, what's the metallurgy? Like, can you get the gold out?
Hmm.
And we would actually have to go out and collect samples and submit those to Newmont's metallurgical lab so that they could evaluate that material that you're exploring. And if it doesn't show metallurgical characteristics that are favorable, man, you didn't get money for your budget. Like, we're not funding that one. Done. But if it was metallurgically friendly, heck yes, they would pile in. Like the focus at big mining companies is around metallurgy. And most retail investors don't even think about metallurgy. It's probably the biggest gap in understanding that we have in the investing community.
Yeah. I was thinking though, sort of to wrap it up here, does one drill result make or break a company though? Like could a company ever drill something that significant or that insignificant that you say that's it, I'm taking my money off the table or I'm putting more money in?
There Okay, that's a really good question. Okay, there are times when I see a drill hole that is, and I can put it in context of what the company's looking for. If the drill hole demonstrates that they have shown their hypothesis is accurate, that their test of that deposit is accurate, then I am all in. Okay. because that tells me they've made the discovery. Okay. But then there's other cases where, I've seen companies drill holes, then they announce visuals, something like that. And the thesis is, hey, we got a porphyry here. And then the assays come back and it's 0.2% copper and 0.1 gram gold. And look, when you see that, you like run away because usually when you drill holes and if they're right in the guts of that porphyry and that's the best they're getting, that's not going to cut it. Okay. Let me back up. Here's the best way to put it. What I do when I keep track of exploration stories is I look and I see if the story is gradually getting better and better and better. Like, does every piece of data that comes back further support the thesis there's a deposit there? If it does, those are the ones I keep. Okay. If it just goes sideways, it's kind of like, yeah, same. I gotta do a deep dive and really dig in to fully understand it, because maybe it's a discovery, maybe it isn't. If I see the results continually decline, out. Okay, that's it, pure and simple. That's my rule. So I like to see the progression of data on a positive trend, and tell us that every news release with drill results tell us that we're furthering a discovery, that we're seeing better and better evidence that the deposits there.